Morning, everyone, and thank you for your patience. I had some trouble in joining with the Zoom link. So today is a really good day, especially after we had the Fed day. And of course, there is quite more news coming up for the day. So we'll be going through the economic calendar, try to understand what's currently happening for the day. And at the same time, I try to understand the technical price action patterns, and of course, potentially identify trading opportunities in the market. So without much wasting time, let's get right into it. So yesterday was the Fed day, and this is basically the day that the Federal Open Market Committee, or the FOMC, basically announces their decision on interest rates. So the Fed decided to go for a 25 basis point interest rate hike, and this was yesterday at 9 p.m., which basically pushed interest rates to a higher limit of 5.5%. So by higher limit, I mean that the US interest rates are usually a range. So it's not a specific number, but rather a range. So previously it was between 5.0 to 5.25%, but now they raised by 25 basis points. It's now 5.25% to 5.50%. So these are 21-year high. So the last time that the interest rates were this high was over 20 years ago. And as a result of that, we had quite a number of reactions in the market, where we saw the dollar weakening, we saw US equity indices rising higher, but then most of the momentum came in 30 minutes later after the FOMC press conference. So the Fed chair, Jerome Powell, mentioned quite a number of things. One, he is not done with fighting inflation. And this basically means that he's open to another interest rate hike on the September meeting. So this was one of the most interesting developments in the FOMC press conference. So the other thing that he mentioned is that currently the labor market is currently very hot, and at the same time, the economy is very resilient. And with consumer confidence rising, he thinks that inflation will continue to being a problem. And he doesn't see inflation dropping to the 2% target up until 2025. So in terms of hiking interest rates on the next meeting in September, he said that the entire approach will be purely data dependent. So the data they get between now and September will guide their decision on whether to hike interest rates or to hold them level at the current 5.5%. So with these, we saw numerous reactions in the market. Of course, we'll be trying to understand the reaction by looking at some of the charts. So the number one chart to understand is the dollar index. So as you can see, after the announcement, we saw the dollar index shooting down. So in the last 2 hours of the day, it was moving up. Then today, you can see the consistent momentum downwards, basically indicating that the dollar is weakening against other currencies. So if you look at the majors, for instance, pound USD, I remember we explained why this is a very important level for pound USD, mainly because it falls as a support level on this particular trend line. And of course, if you zoom in, then you can notice that this support combined with this also sets another precedence for another support level. And the third point was this previous high, which was now acting as support. So we saw the pound USD make a turn around here. And since then, we have seen quite a good run upwards. So from the price action we saw on Tuesday, then Wednesday, and today being Thursday, so it's clear it's a bullish momentum. But from the Fed news, we had this huge candlestick indicating a very strong entry by buyers in this market. And this has continued to push higher. And I expect this to continue being the trend for the day for pound USD, where the currency is expected to continue its strength against the dollar. So for Euro USD, it was a similar reaction, very strong momentum. So also after the news announcement yesterday, this was the reaction in the market. So pull back down close to midnight, and then today we have seen the continuation happen here. So as for USD JPY, you can see the weakness in USD JPY basically led to some further downside momentum. So this is also expected to continue. So it was a key decision for the Fed to hike interest rates, but the market is basically questioning Jerome Powell's speech. So from the data we have been seeing, inflation has been dropping month over month in the US for the last 11 months. And with the last previous reading being 3.0%, we know clearly that inflation is just 1% away from target. So the market is pricing in the potential that inflation will come in down lower than 3%, perhaps in the zone of 2.5%. Once this happens, it will be reason enough to convince Jerome Powell to hold rates steady at 5.5%. So in this case, we expect the dollar to continue weakening. Nobody is betting on stronger rate hikes by the US since inflation seems to be within expectations of the Fed. So as for USD CAD, we saw the market ring last week and the previous week towards this upper trend line. And then once you go to this upper trend line, you can see how the market rejected this resistance twice and then kept going down. And today we are seeing the continuation. And of course, since this is a ranging market, we know that it has been largely moving sideways. So the overall price direction seems to be sideways along this path. So in this case, there's no such a big expectation for this movement. So the immediate target for USD CAD remains this previous low of around 1.31529. So as for gold, we saw an acceleration downwards with a big tail downwards. So gold can be quite volatile. So if your stop loss is too close to the candlesticks, sometimes you'll get these big wicks that will trigger your stop loss, and then the market moves as expected. So in this case, we started seeing these on Tuesday, where there were two rejections here, and the market accelerated higher. Then on Wednesday, the market kept going down, pushed back downwards, and then up. Then during the news, retested the area before moving higher. So towards midnight, there was some form of pullback and now acceleration. And clearly, this is a very strong bullish momentum. And I expect that gold price will continue rising. And to the short term, at least retest the 1987 price level. This was the previous high here. And if it breaches this high, then the price level of 2000 becomes in sight. So for the forward chart, we can see that the market is testing a major resistance here. So once it gets to 1987, if we breach this level, then there's a good chance we'll be seeing the gold price testing the $2,000 level. So 2000 is not very far off, just here, if you check on the forward chart. So there is a good chance we could be seeing gold going all the way up and retesting this area. So as for Australian dollar against the US dollar, clearly it was respecting this particular trend line here. But then after the announcement of the news yesterday, we had the big spike, and early this morning, you can see that the market managed to cross through the trend line, retest, and then bounce higher. So now, with this break of the trend line, basically implies that now we might be seeing some higher prices. And of course, the very short term for an intraday trader may target 0.68373. So US equity indices continue with a strong bullish momentum. So during the news announcement yesterday, they were basically whipsawing, and by whipsawing, I mean moving up and down without a particular directional win. So we didn't have any particular directional advantage here. So the market shot down and then back and then up and then down, which is basically a neutral reaction. However, after the market processed the news, you can see from early this morning, it's just bullish momentum, and this is expected to continue indefinitely. And by indefinitely, not forever, but for some good time, maybe perhaps towards the end of the week. And there's a good chance you can squeeze in a position here, targeting the previous high, which is very close and in sight. So the fact that we are seeing very strong earnings coming from the S&P 500 companies basically implies that there is a renewed confidence in the markets. And now, as we join or enter the London session, there's a good chance we'll be seeing some acceleration here towards the previous high of 15,904. So the S&P 500 was also strongly bullish yesterday after the announcement, then pulled back downwards and then up and ended the day here. But then since the opening of the day today, it's very clear that we've just broken outside this triangle. So you can see the way the market was trading within the triangle, broke here, retested this area twice, and then made an acceleration. And now we are entering yet another leg. So when I talk about a leg, if you think of impulse and consolidation zones, so if the market made this leg, this is what I'm identifying as a leg. So this was the leg, the impulse movement, and then a consolidation. Then it made another leg here. So from here all the way up may be identified as the leg. And if you are a flag trader, this is what we identify as a flag pole. So market consolidates for a while and then attempts to make another leg. So now the market is just starting another leg, and there's a good chance we'll be seeing some further upside coming from the S&P 500 index. So for the Dow, it's also a similar price action, but though slower than the previous ones. So SP 500 and the Nasdaq are moving strongly higher, but then the Dow is also in there. And of course, after the big jump yesterday, it raised some gains, and now it's recovering and moving to test previous high of yesterday. So as for Brent oil, we didn't have much happening here. So I can say that after making this huge leg, Brent oil is literally just consolidating. We don't have much happening here. So if I was to use a triangle to map this area here, I'll take the recent high, recent low, and then map it this way. So it's literally a market that is oscillating within a triangle, and sometimes you just have to be patient and wait for the breakout to trade that breakout. So the French 40 index was dropping quite nicely after rejecting this resistance, but now it's going back to the same level, and I'm confident it will break since now the market is no longer forming lower lows. The lows are just around this area. So after bouncing strongly from here, we're retesting this area, and there's a good chance we'll be seeing a break. So your market is persistently testing a level. Sometimes the probabilities will eventually win, and you'll see the market breaking that level. So it's the same thing for the EU 50. So it has already broken the previous resistance that you are looking for short selling positions. And now from the forward chart, you can see we are going back to the same area, and there's a good chance we'll be seeing a break from here. So as for BTC, huge drop here last week, and now some sideways momentum. It's almost like the market is climbing what we call a wall of worry. So it's slowly but definitely climbing. So in this case, the value area seems to be on the lower trend line. So if there was to be a huge jump downwards to this trend line, then it may present an opportunity to go long. So as for the New Zealand USD, it's a similar price action with what we saw with the Australian dollar. So in this case, we are seeing the market going for it. So yesterday, you can see the big spike happened here. It is some gains, but then today we woke up with a strong momentum upwards. And of course, after consolidating for almost 3 days, then a break to the upper side is expected to have some momentum, and perhaps some continuation will happen in this chart. So among the recent price action levels, I think this is an important one on the forward chart, 0.62952. So breaching this area would basically imply the price keeps going up and eventually gets to this level. So on the economic calendar for the day, we still have more news coming in. And I think the most important news will be the ECB policy decision. So at exactly 3:15 p.m., the Eurozone or the ECB will be announcing its interest rate decision, where the market is expecting that the ECB will hike interest rates by 25 basis points, eventually pushing Eurozone interest rates to 4.25%. So immediately at the same time, it will be releasing the monetary policy statement, and this statement will basically be showing the decision they made. And then later on, this is 30 minutes after this, that is at 3:45 p.m., the ECB press conference will convene. So it's similar to what happened in the US. So during the press conference, the ECB President Christine Lagarde will be talking about what they're expecting to see in the Eurozone, the economic indicators they are watching, and of course, give a projection on interest rates and the outlook for inflation in the Eurozone. So after that, she'll be responding to questions from a journalist. So yesterday we had a very funny movement where one of the journalists that was questioning the Fed Chair Jerome Powell basically quoted the uptake of the Barbie movie and of course Taylor Swift making record sales for her album as an indication of the strength of the consumer. And it was a very interesting moment in the Fed meeting. So hopefully today we'll have some more crackers happening during the ECB press conference. And of course, this is expected to raise volatility in the European currency, that is the euro. So for anyone trading the euro, you should be aware that there will be very high volatility coming in from 3:30 p.m. and of course after 3:45 p.m. And of course, higher interest rates is basically expected to be bullish for the euro. So the fact that we are seeing the dollar losing against other currencies, then there's a good chance we'll be seeing that the euro may continue recovering. So with this expectation, if you are a Euro USD trader, then it's important to understand the key price levels that the euro may go for. And of course, the immediate one remains the previous high. This was last week's high around this area here, if we ignore the tails. So 1.12502. So if there's strong bullish momentum coming in from the ECB press conference, then this remains the target for Euro USD traders. These right here. On the contrary, if it happens to be dovish and Christine Lagarde doesn't promise any strong rate hikes, then we could be seeing the market retesting the week's low. However, chances are that Christine Lagarde will maintain the same tone. She has been saying that we are going to hike interest rates and we will continue doing so until inflation gets to the target. So the current inflation rate in the Eurozone is 5.5%. Core inflation is also at the same level at 5.5%. So in order to push this back towards the 2% target, then the ECB may have to do more in terms of hiking interest rates, and this is quite positive for the currency. So as for the Euro Stocks index, then there's a good chance that it could continue rising, but then further tightening is not very positive for the Euro Stocks. So it's also important to note that if the market is just playing around 44.12, which has been the major resistance for the last couple of cycles, you can identify them from my chart here, then there's a good chance that the market will be rejecting this area and going back downwards. So if we see any evidence of entry by sellers in this market around this area, then it will be very important to go for short selling positions, targeting just the most recent low. And this could be a very nice trade for you guys, but it's a potential case. So we just have to observe the price action and the outcome of the ECB press conference. So besides that, if you look at any other news that you're expecting for the day, I don't think we have more news with such an important impact. But of course, the advanced GDP quarter over quarter for the US may have some impact for USD traders. The unemployment claims, advanced GDP price index, core durable goods orders, and goods trade balance before we look at the preliminary wholesale inventories month over month. So this is a whole host of economic data, and of course, they could have some impact on the US dollar. So as we approach the end of the week, we will be looking at the Bank of Japan outlook and monetary policy statement tomorrow. And of course, policy rate, which is expected to remain constant at negative 0.10%. So nobody is expecting that the Bank of Japan will be changing interest rates, but the monetary outlook report, as well as the press conference, may have some good impact in the markets. And of course, we'll be getting GDP data from Canada and the Fed's favorite measure of inflation, which will be the core PCE price index month over month, which will be happening at 3:30 p.m. And of course, the revised University of Michigan Consumer Sentiment Survey. So that's it for the day. Thank you very much, guys. Let me check on the comment section if there's any questions that I may have missed. Good morning, Witty, Lemuel, and Trader FX. Kevin. Morning, Brian, Kevin. There's Mary Tharao. Thank you. Which currency strength meter website do you use? I don't normally use the currency strength meter in my trading, But I think the FinViz website is quite a reliable resource. So if you go to finviz.com, which is short for financial visualizations, and then you go to Forex, then from here, you can click on performance. And here you can see the strength of the currencies based on different time frames. So for today, the most or the strongest currency seems to be the Australian dollar, followed by New Zealand dollar, the Swiss franc, the euro, the GBP, the Canadian dollar, the Japanese yen, with the USD being the weakest. So if you look for the week, then you can see the changes. The month, the last 1 month, you can see the dollar has been the weakest, even for the month. Month to date performance, also the dollar is weakest. And of course, in the last 3 months, which is a quarter, the weakest has been the Japanese yen, then the dollar, and of course, the strongest currency has been the Swiss franc. You can even check year to date, that is from the beginning of the year. And clearly, the Japanese yen has been the biggest loser, and the Swiss franc and the pound has been the biggest gainers. So there's another comment on gold. I'm seeing some rejection of high prices. Where is that chart? So this is a H1. So notice, yes, there's some tails that are forming on the upper side. There's the first tail here and another tail here, indicating some form of rejection of higher prices. But then if you compare with the previous ones, the ones that we saw here on Tuesday and the ones that we saw on Wednesday, these ones are way longer. Of course, it's always good to check on different time frames. And of course, if you check the 4-hour chart, these are 3 consecutive bullish candlesticks. So we don't have a bearish candlestick on the 4-hour yet. On the daily, these are 3 consecutive days where the market is moving upwards. So even if there's this on the short run, there's a good probability that the market will end up closing higher. So last question is on pound yen. I wonder why you guys prefer the pound yen pair, but I know it's one of the most volatile pairs in the markets. So it tends to yield some good returns if you're on the right side, and of course, some big risk if you're on the losing side of the pair. So clearly, it's a market that is just trading sideways. So if I remove these arrows here, clearly, this is the overall direction of the pound yen. So if it's not close to this upper trend line or the lower trend line, then it means it's not a very good entry point. So in this case, it's not a market that is moving in a resistance or a support zone. What I can see from here is basically a market that is largely consolidating. So though the pound is really strong in the markets, if I was a short-term intraday trader, I would be looking at these swings in this perspective, and now watching this price zone for a potential entry or a potential breakout. So if there's a breakout, you go long. If there's a rejection of this area, then you probably look for a short selling position. So yes, it's at a critical level. So all you have to do is observe what happens with the price from this moment onwards, especially at the top of the hour. So if at the top of the hour, there's a break and the market closes higher, then there's a good chance it's a breakout and you might go for a long position. The chart is not showing. I think I'm sharing. I think there's an issue with my connection. Hopefully it will get to connect. So that's it for the day. Guys, enjoy the rest of your day. And of course, remember to listen to the latest podcast, latest episode of the Bullish Banter podcast. It's now out. It's available on FX Pesa YouTube. It's available on a host of podcast platforms such as Spotify, Apple Podcast, Google Podcast, and of course, TuneIn. So once you tune in, we have quite some good content that you've been uploading. So if you're very new to this, make sure that you go through that. So in addition to that, if you love and enjoy these sessions, so make sure to subscribe to our channel, and of course, share these live sessions with other traders in your communities, and let's get to grow together.